So in this lesson, I'm gonna explain risk to reward to you. You've also seen when people are writing RR, what's the RR of this trade? What's the risk reward? What's the reward to risk when people say that? Because we want to know in this every time we trade, how much am I willing to risk to be able to gain an amount? How much am I willing to risk to gain in that amount? I don't want to be risking $1,000 to gain $500. That's a big no-no. So I'm just gonna jump directly into the chart and explain it to you in a simple manner. And if you have any questions, feel free to ask them in the lesson check-in. So I've drawn two boxes right here. How do we identify, first of all, the risk reward? All right, we have two tools that we're using. We're using the long tool and we're using the short tool. So we usually, when we use the long tool and the short tool, at the risk reward in the long tool and the short tool, you see that it says 1. And as soon as you change the where we take profit, it changes. And as soon as you change where we take profit, it changes. So the rule of thumb that I would like to use is not to focus too much on the risk reward and focus on what the price is telling us. Because if we have liquidity right here, right, and it always only gives us a 1 to 7, am I willing to wait to have it to give me a 1 to 3, but the highest probability of the trade that can be reversed from this area? Am I supposed to take this trade or am I not supposed to take this trade? I just don't want to make it confusing for you. We take profits at liquidity levels, or let me say that in another way. We want to take profits where there's the highest probability of the market to move into the other direction and take us out, because we there's always a probability, always a chance of the market to take out the highest probability liquidity or fair value gap and give us a reaction to the upside and take us out. So I'm willing to take some profits on these liquidity areas where it's the highest probability of the market to return, and then take a less amount of profit, less amount of risk reward, based on the tools right here. So we're using basically these tools to count our risk reward ratio, but we are using the where the highest probability of the market returning is where we want to take the trade, is we want to take the profits, not just focusing on where the risk reward amount says. So in this risk reward amount, let's say every trade we take is a 1 to 3, right? You can see that I say 1 to 3 because it says risk slash reward ratio, meaning if I risk $1,000, for every trade I'm taking, the gain is times 3. Why is it times 3? Because the RR 1 to 3, which means that everything I risk is times 3, which equals to 3,000, as you can see below, right? So we have two boxes right here. I have two boxes that I've drawn for you. You can see that this one box is the losses in dollars. Dollars, pounds, euros, it doesn't matter. It's the losses. And in this box, it's the wins. All right? So every time I trade, every loss I've taken and every win I've taken, I'm going to count this inside of this box, just to give you some perspective of how this works. All right, so every loss I've taken, I'm trading, and every trade I've taken, I get a loss. I lose one trade. All right, I've lost $1,000. I lost another trade. I lost another $1,000. That's $2,000, and I lost another trade. That's another $1,000. That gives me $3,000, right? And now, and the fourth trade, what happens? I'm still risking $1,000 and I'm gaining $3,000 in one win. So one win equals to three losses. One win eats up three losses. And this is how we win, by probability and by having a proper high risk reward at the end of the month. Because if you're looking at it in a different horizon, if you're looking at the trades you're taking, let's say, you know what, let me continue this. Let's say then I lost. I won this trade, then I lost the other trade right here. This gave me 4 losses. When people look at my P&L and they see that, oh, you have a lot of red days. Yes, but I'm taking another win after that. I'm taking another win after that, and what happens? This other win gives me a 1 to 3, meaning I'm risking 1,000 to gain 3,000. So this another win right here eats up this loss and gives me 2 more wins, right? So now, because I've lost 4 trades and won 2, I'm still profitable at the end of the month because the risk reward is higher. That's why I said in the beginning, I can't be risking 1,000. I can't be risking 1,000 to gain 500. It doesn't work that way. That's the opposite of the risk reward. We want to gain more by risking um, less, basically. I want to risk a little bit to gain more from that risk. So that's the wins. That's how the wins happen. And I want you to see this in a different horizon. I want you to see this from, let me draw on this tool because I want you to see this in a 10 trades horizon perspective. Yeah, horizon perspective. So if you take 10 trades, right? If we take 10 trades, and of these 10 trades, this is what happens. I take 10 trades. That's one, two, three, 4, 5, 6, 7, 8, 9, and that's 10, right? This is 10 trades that I'm taking. Oh, so every trade I take, every loss is $1,000. $1,000. Every win is 3,000. All right, I want you to think of that. Every win is $1,000. Every win is 3,000. Every loss is $1,000. So if I go here, I'm starting out the month badly. I'm taking 1 loss, that's $1,000. 2,000, 3,000. I'm taking 3 losses, and then I take a win. What does that do? That win eats up all the losses that I've taken. All right. Let, let me just continue doing that. And then what do I do again? I take I take another win. So what happens now? I'm up. You know what? Let me change it because I'm not thinking in dollars. Every loss is 1%. Let me do that. Every win is 3%. That's how I think. I think in percentages, not in amounts. Every loss, I lost 1% right here, 2% right here, 3% right here, and I won this trade. This trade gave me 3% in win. So basically, in this area, I'm at break even. I'm at 0%. I haven't done anything yet, right? I've taken 4 trades, lost 3, won 1, so I'm back at break even. I'm back at 0%. Then I won another one. What happens when I won the other one? I'm up 3%. I'm up 3% on the 10 trade horizon perspective, right? And then the trade after that, I lost 1, then I lost 2. And this is what usually happens. People are starting to question their strategy, they're changing strategies, they're jumping back and forth. Is my risk reward correct? Should I change it or not? And this, let me show you here. So I'm losing 3%. Now I'm down. How much am I down? I'm down to 2% right now, and then I'm down to 1% right now, right? And then the second thing happens, I'm losing another trade, and now I'm back at break even. I'm back at break even because I've won this trade, I've lost this trade, I'm back on break even, and then I take a winning trade right here, and then I take a losing trade right here. right? So what happens? Um, I'm at 3% right here, and then I'm down. I'm at 2% right here, and then I'm down at 2%. So that's what happens because at the end of the month, I'm at a 2% win. I'm on the end of the month, end of the week, end of these 10 trade horizons. I'm still by probability winning. Why? Because I have a proper risk reward system and I'm thinking about it this way. I'm not blowing accounts based on the losses and then I go out of tilt and risk more and over leverage and not using stop losses and all these things because I've lost 3 trades in a row. If you think about it in a long-term horizon, you will eventually become a winner. Because you see, 1, 2, 3, 4, 5, 6, 7. Out of 10 trades, you've lost 7 trades, right? You've lost 7 trades out of these 10 trades. And you've won 3 of those 10 trades. So this gives you a 9% return because you're risking 1% and gaining 3%, and 7 of these trades gives you a 7% minus in return. 9 minus 7 equals how much? 2. Now 2 doesn't sound much, but if you're doing this on the week, right? If you're doing this every week, 2 times, let's say 4, because we have 4 weeks, that's 8%. 8% on the month, that's a great return. That's a great return. Doing this consistently, that's a great return. So that's my perspective on risk reward and how it works and how we are supposed to think in a long-term horizon. All right. Feel free to share, as always, the lesson check-in, what you learned from this lesson. One sentence is enough. Feel free to share it below. And as always, if you like this video, feel free to follow me on YouTube, on Instagram, and if you haven't done it already, join the Skool community. Take care.